Welcome to the Accounting Cycle practice set. This is a video series that will go through an entire practice set, and the practice set is designed to review the basics of the accounting cycle. What is accounting? So we have to begin by understanding what accounting is. This is the definition by the American Institute of Certified Public Accountants, and they say that accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money transactions and events which are at least of financial character and interpreting the results thereof. So to simplify that, accounting consists of three activities. First, identifying transactions, measuring the transactions, and communicating the results of all of the transactions for a period of time. So accounting quantifies and measures transactions which are expressed in terms of dollars and communicates accounting information to users, both internal and external, so they can use the information to make decisions. So what is an accounting cycle? For users to make effective decisions, accounting information must be collected, then analyzed, summarized, and interpreted in a systematic process. An accounting cycle is a series of steps which are performed for a company during each accounting period. The process begins with a transaction and ends with the preparation of the financial statements at the end of the accounting period. Now let's take a look at a typical accounting cycle. All right, so the accounting cycle starts up here with the first step, analyze business transactions. So a transaction will occur and we will then analyze it. When we're analyzing it, we're determining which accounts will we be using, what is the date, what is the debit, what is the credit, are we increasing, are we decreasing, how much? So we're asking a whole bunch of different questions. From there, we journalize the transactions, which means we record them in the books and records. Then we post the transactions from the journal to the general ledger. The general ledger is a place where we accumulate the balance in each and every account. So for example, our cash account, we'll start with our beginning balance and then we'll make additions to the account, subtractions, and then at the end of the month we have an ending balance, what's left in our cash account. From there, we will prepare an adjusted trial balance. That adjusted trial balance just helps us to make sure that everything was recorded and the debits equal the credits. So make sure everything is in balance. Next, we journalize adjusting journal entries and we post them to the general ledger. After that, we'll prepare our adjusted trial balance to make sure that our debits and our credits agree, and then we'll prepare the financial statements from the adjusted trial balance. Next, we'll prepare our closing entries and post those to the general ledger. And our final step in the accounting cycle is to prepare the post-closing trial balance. You should download the instructions and the worksheet, and we will be going over both. So this is the beginning of the practice set. So the intention of the practice set is to review all the steps in the accounting cycle. We just reviewed those, so let's go ahead and read through our practice set. So Gloria Spencer owns a company called Gloria's Cleaning Service, and it specializes in cleaning homes. You've been hired by Gloria as her bookkeeper, and after talking to her, you prepare the chart of accounts. Okay, so what is a chart of accounts? A chart of accounts is just the listing of all of the accounts for that particular business. Each business has a different chart of accounts. The accounts are generally numbered, and for each different type of account there's a numbering sequence. So for example, the accounts are ordered in the order of the balance sheet or the accounting equation. So assets come first and they begin with 1. Then we have our liabilities, they begin with 2. Then we have our equity accounts, they begin with 3. Then we have revenue, which begins with 4, and then our expense accounts that begin with 5. So for example, our cash account is 101. Cash is always our first asset listed, so we give it the number 101. Next, we have receivables, 102, and supplies, 103. Then we have accounts payable, 201, wages payable, 202. Gloria Spencer Capital, account 301. Then we have Gloria's drawing account, which is account 302. She has service revenue for when she provides services, and that's account 401, and she has 3 expenses. She has her rent expense, 501, her wages expense, 502, and supplies expense. The first month of business for Gloria's cleaning service is August of 2020, and the transactions for the month are as follows. So the first transaction for the month of August, Gloria opened her bank account. Remember, this is a brand new business, and she deposited $3,000 of her personal cash into the account, and that was for her capital contribution. Then on the 5th of August, she paid her first month's rent, which is $225. And then on the 15th of August, she deposited $3,250, which she collected when she performed cleaning services. On August 16th, she paid her cleaning staff wages, $200, and for this practice set, we're going to disregard payroll taxes. On August 22nd, 2020, Gloria received a bill of $75 for cleaning supplies, and she's going to pay that bill next month. And on August 31st, she withdrew $800 for her own personal use. All right, so let's go to practice set part A. That's what we will focus on. And in the next video, we'll go over practice set part B. All right, so this first step says, using the chart of accounts, open the accounts in the general ledger. In addition to the accounts in the chart of accounts, make sure that you open the income summary as the last account, number 600. Record the journal entries for August using General Journal, page 1, and that's the tab in the Excel workbook. Make sure that you include explanations. After that, we'll post the entries to the general ledger. And when we post our entries to the general ledger, we'll use J1 to indicate the General Journal page 1 in the reference column. We'll then calculate the balances in our general ledger accounts. I actually like to do that as we go along. But either way, we'll get the balances calculated for those accounts, and we'll prepare the unadjusted trial balance columns in the worksheet. That's the same as preparing an unadjusted trial balance. And then we're going to add all the debits and credits, and we'll make sure that they balance, and we have to make sure that it has a complete heading. When we're done with practice set part A, the unadjusted trial balance columns should each equal to 6,325. All right, so let's go ahead and look at our worksheet. So our first page in the worksheet is General Journal, page 1. So you can see that General Journal, page 1, and the tab says GJ, page 1. And our second tab is the General Ledger, and this is what we're going to open. And then the last one that we are going to use in this video is the worksheet. Alrighty, so I'm going to go to the General Ledger, and I'm going to go back to the instructions. Okay, so step number 1 is using the chart of accounts, open the accounts in the General Ledger. So let's do that. So here we have them. So our first one is cash, and it is account 101. So let's go to our worksheet. So it's account 101, so we're going to put 101 here, and it's cash. All right, so next, let's go back to here. So our next account is 102, and that's accounts receivable. And accounts receivable was account 102. Next is supplies, which is account 103. Our next one is accounts payable, account 201. Okay, and our next is wages payable, account 202. Our next account is G. Spencer Capital, 301. Next is account 302, and that is the drawing account. So we do G. Spencer. And that's 302. And our next account, oops, is service revenue, 401. Rent expense, 501. Wages expense, 502. And supplies expense, 503. Okay. So if I go back to the instructions, it says, in addition to the accounts in the chart of account, make sure you open income summary as the last account, account number 601. So we have one account left. So we'll call that income summary. And that's account 600. Okay, so let's go back here. That is step number 1 completed. So you can check it off. If I were you, I would print it and then check it off as you go along with each one. Okay, so our next one is to record the journal entries for August transactions using General Journal, page 1. Make sure you include explanations. All right, so we'll find our transactions right here. So it tells you first month of business for Gloria is here, and these are the transactions. So our first transaction is on August the 1st. She opened her bank account and deposited $3,000. Okay. She opened her bank account and she put money in that, so we're going to use the cash account. We're increasing the balance in that bank account, so that means we're going to debit it. Assets increase on the debit side. That money she put into the account was for her capital contribution, so we're going to use her capital account and we're going to increase that. Equity accounts increase on the credit side, so we will credit that account for $3,000. All right, so let's go back to our General Journal, page 1. So we're going to do August 1. Cash, right? So we're going to debit our cash account for $3,000. And we're going to use G. Spencer Capital, because that is the name of her capital account. And that is also for $3,000. Remember, debits have to equal credits, and our explanation is to record owner capital contribution. All right, excellent. Transaction number 1 recorded. All right, so our second transaction happened on August the 5th. Gloria paid $225 in rent. So we do not have to bring August down because we already have August here, so we just have to put the 5th here to indicate it's a new date. And that transaction was, remember, she paid $225 in rent. So she used cash, so she's going to credit her cash account. If you remember, our debit accounts come first, our credit accounts come second, so our cash will be on this line. And we use that cash to pay our rent. And when we pay things associated with being able to earn our income, those are expenses. $225. Okay, so and then we're taking it out of our cash account. That's how she's paying her landlord. And now we need an explanation, so it's to record payment of rent. Excellent. Now we have 2 transactions recorded. So let's go here. So we've got 1 and 2 recorded, so let's go to the third one. On August the 15th, Gloria deposited $3,250, which had been collected when she performed her services. All right, so she's already performed her services, right? So she's satisfied the performance obligation, and that means she can earn her revenue of $3,250. Revenue accounts increase on the credit side, so we'll be crediting service revenue. It says she deposited the $3,250, which means she put cash in her account, so we're going to debit our cash account. Okay, so the date for that transaction was the 15th, and we're going to debit the cash for $3,250, and we are going to credit service revenue, and our explanation is to record services performed. Okay, 3 transactions down, 3 more to go. All right, so our next transaction occurred on August the 16th. She paid her cleaning staff wages of $200. Remember, we're going to disregard our payroll taxes, so she's going to use cash, so we will credit our cash account, right, because it's an asset. Assets decrease on the credit side. And we're going to debit wages expense. So that's on the 16th. So we have wages expense is our debit, and that's $200. And we're going to credit cash because we paid her in cash. It's another $200. And our explanation is to record payment of wages. Excellent. 4 transactions done. Let's look at number 5. On the 22nd of August, she received a bill for cleaning supplies, which will be paid next month. Okay, so it's saying she's going to pay it next month. In other words, she's going to pay that later. So we will be using accounts payable. And it's for cleaning supplies. So she buys her supplies, she puts them in a room, they stay there until she uses them. So we're going to use the 22nd, so we're going to use the account supplies. This is an asset account because it's something that we own, right? We own it until we use it, and when we use it, it becomes an expense. So we purchased $75 of supplies, put them in our storeroom, and we're going to pay for it next month, so that's accounts payable. And that's $75. To record the purchase of supplies. And you could put on account. Alrighty, 1 entry left. And our last entry is on August 31st. She withdrew $800 for her personal use. So we're going to put the 31st here. So she withdrew cash. That means she is reducing her cash balance. We're going to credit cash, and we're going to debit the drawing account. The drawing account works in conjunction with the capital account. When we increase capital, it's a credit. She's actually decreasing her capital because she's taking money out, right? So that's going to be a debit. The name of the account is G. Spencer Drawing. And that is going to be $800. And the credit is cash. And our explanation is to record owner draw. All right, so that is practice set A, number 2. So we've got number 1 and number 2. I'm going to end the video here and start a new video for the last 3 steps.